Hello everyone, welcome to today's live trading hour brought to you by the Live Trade Room. Sorry, do bear with me just a second. In my haste to broadcast, we'll just put up the actual screen itself. That would certainly help things along a little bit. There we go. Okay, so welcome to today's trading session. We're looking at some charts off screen, and it looks like we've got some potential decent opportunities in the pipeline yet again. After what has been, I suppose, a little bit of a strange few days, where Wednesday evening the Fed, made it clear to the markets that they are looking to increase interest rates by with 2 rate hikes by the end of 2023. And you would think that would be a pretty important signal for these markets to start selling off, and I mean the indices, and we would expect to see some strength come into the dollar as a result. So what we're seeing today is a little bit of indecision, but we very well may get follow through as we close out the day. But the market's just taking a little bit of a pause. We've got things like the Nasdaq making all-time highs, so we have a few issues certainly to contend with. So without further ado, then we'll put together our trading plan for you and make it as clear-cut as we can. So please see our risk warning currently up on screen. So as we approach the US Open in about 15 minutes, we'll see the risk warning currently up on screen. Of course, take note of the risks involved in trading the financial markets. But let's start with we'll start with just a quick review of some market moving news. See if there's any data points that we should be mindful of when we trade these financial markets. If we scroll down to Friday, the 18th of June, you can see we had the BOJ. So we'll have a look at the BOJ, the yen in just a moment, but we've seen some Japanese strength across the board, largely to do with this kind of risk-off type of environment for the stock markets. The yen is viewed as a flight to safety trade, so we're seeing some capital definitely coming into the yen. So that very well may continue. We've got ECOFIN meetings all day today. One of the bigger sort of developments, and very, very surprising indeed, is that your longer term bonds, like your 10-year treasury, we're currently seeing a very significant drop post FOMC, and it feels very counterintuitive to see this. So we had a really strong spike to the upside, and then we've seen an equally significant drop further to the downside. So it just means that there is I suppose an ease about the Fed looking to increase interest rates, which is just quite surprising for many reasons. So we do have to, I suppose, take that into account as well, is what's going on in the bond markets. As the bond markets sell off, it actually creates a bit of an environment for growth in your indice market, so you'd expect them to tick higher. So we do have slightly confused market conditions at the moment. However, let's go into the technicals and we'll see what opportunities we have for you today. So we're just beginning to see these markets begin to roll over to the downside. So really we're looking for dollar strength across these markets, and risk off market conditions. You can see in the last sort of hour we've seen a nice drop to the downside for the S&P 500. So really it's a case of just maintaining these dollar weakness trades. What we can certainly do is put the gold market in exchange for the euro dollar. Which the euro, I mean, yesterday we saw a major move below that 85.80 level, a significant move, and as we've seen quite a few times before, we've seen the strong reversal of that very, very important level, and just another false breakout so far for the euro pound. Worth looking at the gold market just to see what's going on there. So as we approach the US Open, we can certainly look at some of these opportunities. Just focusing on the, if I just get up our pen, so sort of clarify things as best we can. Okay, so you get these little periods, and then you get very significant moves. I could argue within this space in here, and very much within this little zone. So what we can assess from this is that the market condition is very much to the downside, and we would anticipate further downside as well. So we can just mark these lows, and if we break these lows, then we'd expect further downside for the euro dollar. So we probably don't need to be more critical than this. We are in a bit of a sideways moving pattern. What you have with this market is a clearly defined stop loss. If your entry's below, you've got a definitive stop loss, which is a technical stop loss. So that's the euro dollar. We'll come back to that in just a second. You can really do this type of analysis across all of the dollar pairs. Some are a little bit easier to work with perhaps than others. But the analysis is very similar. The direction is very much to the downside. So I suppose what we can do is we can speculate on which market should we be focusing on. Very much the dollar. What direction dollar strength, i.e. the pound dollar to the downside, is something to really focus on. So what we can do is, as we approach the US Open, we can look for the next flush to the downside, which is your breakout trade to the downside. There is a technical opportunity as well, just for this little breakout trade in this little zone. You can utilize this area up here as a stop loss. So the pound dollar to the downside is a viable trade. So we've had this this yen strength. So the yen has actually been stronger than the dollar over the last 2 days, which again is quite counterintuitive because the initial move was very much dollar strength. So that's why we're seeing the pound yen to the downside and the euro yen to the downside. But they're just kind of, we're getting a little bit of a pause back to these lows, yesterday's lows in both of these markets. You can see the little pause around yesterday's low as well for the dollar yen. We've got strong continuation up at these highs. Sorry, let me say, we've had a strong move to the upside, but we've got a little bit of hesitation up at these highs. So what we can do is just identify the consolidation at numerous points. The previous price actions very much to the upside. So, I mean, again, we can look for a confirmed breakout above this high, and you have really nice stop loss placements. We do anticipate some more dollar weakness. There's no reason quite right now to suggest otherwise. All of these are having these periods of sideways moving followed by the next leg to the upside. So we can prepare accordingly. They're all at slightly different stages in terms of breaking above the monthly high. The CAD and the Swiss franc are just trading at those levels. So we're in the 18th of the month. So we've easily got some more upside in these markets to see, you know, actually on the monthly time frame. If we look at it, if we look at what's been happening on the last number of months in markets like the dollar's been selling off really quite consistently for quite some time, and this is now the first opportunity to actually get that pullback on the bigger time frame. So, you know, a few traders have asked us, you know, how much more can we see in the dollar strength, and for the short term, quite a lot. There's no reason to expect otherwise. We're momentum traders, so we want to identify where the momentum is, what direction the momentum is moving in, and look to trade with that until we have reason not to. So plenty more short term, like over the medium and longer term, we'd be edging more towards dollar weakness, except right now with the current status quo and the current situation, then we can look for that continuation trade. So we've got a fairly neat sort of breakout trade to the downside for the Aussie dollar. Stop loss above, maybe for argument's sake, you'd probably want to just go with this little technical high up here. So we'll have a look at the Aussie, the New Zealand. Unfortunately, similar situation. It's not unfortunate, it's just the situation. So we'll take the low. We could probably put a bit of a high in here. And this is one of the examples where we've had a really strong flush to the downside from those highs. Okay. So the analysis is very similar for the New Zealand dollar, break beneath the low. And the thing is, if you see this price action across the board, like we've seen over the last few days, really it's only a day and a half, really, is what we're kind of talking about here. But there's no reason to suggest that we won't get continuation. There'll be lots of traders looking to buy these lows to varying different degrees. But what the market is continuing to do is move with the momentum, which is we keep getting these flush trades to the downside. So a difficult trading condition if you are sort of a buy the low or sell the high type of trader, and there is there is many of those traders out there.
White House economic advisor Bernstein says he's more concerned about inflation than before, speaking to CNN.
You see, inflation's the really big problem. We don't want a situation where inflation gets out of hand, and it can get out of hand pretty easily, which is what's really surprising about these sort of longer term bond yields. We're seeing them really soften, and for limited reason, really. It's going to be fascinating to see how these markets play out now over the next 6 months, really. But for us, the Fed have played their hand. They've started to start that process of unwinding. It's likely to be a significant shift for these markets.
The White House advisor Bernstein still very convinced that inflation is transitory.
You see, that's that big word, isn't it? Transitory. Like, how do they define transitory if the prices that you and me are paying for things are going up, and they're going up across the board?
Overnight financing rates spot 0.5% for June 17th. That's up from spot 0.1% on June the 16th. Just a bit, that's the US secured overnight financing rate at 0.05% for June 17th, up from 0.01% on June the 16th.
Okay, so they're just making reference to some of these news events. Just to show you again the 10-year bond yield, it's really taking a strong dip to the downside. So it just creates a positive environment for your global stock markets. The best place to see it, without a shadow of a doubt, and the main beneficiary really of that would be a market like the Nasdaq. So, which is it's actually technically made a new all-time high today. So that's the backdrop to these markets. Very much counterintuitive, but there is this realization that actually, if the Fed stand by at least 2 rate hikes between now and the end of 2023.
More from Bernstein, equally concerned about inflation as before.
That could be as little as a 0.5% interest rate by the end of 2023. And I think the markets are turning around and saying, actually, we can probably, absorb that. So we are seeing that shift back towards, your tech stocks, and they're seeing the biggest uptick in their fortunes. Not so much for the Nasdaq. We've had a very significant turnaround in the FTSE. The Dow Jones has been on this little grinding path for quite some time. The Dow Jones, as 2 days ago, was at its highs, its recent highs, and now is just really taking a strong move to the downside. The Nasdaq, same situation, it's just rolling off its highs, and the Nikkei as well. So we really do have a bit of a mixed bag as far as the technicals are concerned, but also probably more importantly the fundamentals, and of course the sentiment is very mixed as well. So what you're seeing across a lot of the media channels.
AstraZeneca welcoming the court ruling on their COVID supply.
I'll just turn off our thing there for now. They're just our squawk service. So we do have this mixed sentiment. So we're seeing from different parts of the media. We're seeing some experts coming out and say, yeah, this is great for stock markets, that can absorb the interest rate hikes, and there's no problem, and inflation's transitory, and prices are going to continue higher. But you're equally seeing the same that are saying, for those same reasons that they would expect prices to soften somewhat with the inflation expectations and the fact that we've got high unemployment, and as more people go back to work, generally people will have more money in their pocket, and that's only likely to push prices even higher. So it's quite hard for us to understand how the Fed can sort of say that this inflation story is transitory. Time will tell. That's the only thing that will ultimately prove who's correct and who's not. And to assess inflation as well can be very much manipulated. So they've got a way of sort of playing down the inflation story if they so require to. Okay, so just touching upon Bitcoin, as you can see, we're in this actually quite strong little sideways moving pattern. Ultimately, a break above this level here, the 40 to 41,000 level, you'd expect prices to start climbing, and below the 33,000, if we get a close below that, you'd expect prices to continue lower. At the moment, we're in consolidation, so prices can literally go in any particular direction from here. So just be mindful of that. Not that we actively trade this market, because we don't, especially with as a derivative. It can be a sort of a buy only type approach. If prices break above 40,000, you'd want to keep it kind of longer term. But getting in and out of these markets, with such a wide range is notoriously very, very difficult. Okay, so, and because it's so speculative and so wide ranging, these markets. So yesterday our momentum sell trade was below the 1925. Now we're down. Now we're looking at similar level, probably at the 1885 level. So we haven't seen much of a move below that level. We've seen largely sideways moving patterns, but certainly we can expect further downside. So it would be a momentum sell trade, this time below the 1884. So that's the 1884. So that is your high probability sell trade. That's fine. So that's the euro dollar. We can see that in there. I'll just try and make it a bit clearer for you. So we've got a high probability momentum sell trade below that 118.84 with a clearly defined stop loss. You're probably talking about a 40 pip stop loss, potentially something like that. It's not a bad idea during these markets with quite ranging, with wide ranges within some of these trading opportunities, to avoid any kind of snapback, which we can see quite a lot. So the same principle applies if we just get the pound dollar up. We'll just be looking at a slightly lower level. So yesterday we were looking at selling below the 39.32. Let's see where that is. It's just a little bit lower actually, isn't it? So it's just breaking below this low here, and we've had some continuation to the downside. Now our low is the 38.53. So we're now 80 pips lower in this one. 38.53. Okay, so we can keep an eye on those two. So yesterday we were looking for the pullback around the 75.95. So it was just this little pullback here. We got a few pips away from that, so about 2 pips away from that before we got the flush trade to the downside. Now we can look for the kind of the breakout. We're so close to this breakout level as we approach the no, we're past the European Open now, so we're into the US Open, so we've got some US cash coming into these markets and are likely to drive prices. So we'll probably use the 75.62 as a stop loss. And we have the 75.11, so you want to give yourself that little bit of room. We are prone to these little snapback spikes. So a breakout sell trade below 75.11. So instead of a pullback trade, this is a breakout trade. So we like to just classify what the trade is. It kind of helps from a visual and understanding the dynamics of the trade and what happens at breakout levels. So we identify it as a breakout trade. It's a breakout sell trade, give you the direction. Below the level is 75.11. So breakout sell trade. So we put this level in now, and now it's just a case of just executing that trade. The New Zealand dollar. Yesterday we were looking at that little pullback trade around the 70.35, which was this little spike back in here, like the New Zealand. Again, just a few pips off that little pullback opportunity. Now we can look for the breakout trade below the 69.58. Uh, 69.58 level. 69.58. So this time it's a breakout sell trade. Okay, so we've done this analysis for $4 trades. You could easily do it for all of them. And HP just stands for the high probability trading opportunities. It looks like we'll be able to get into a few more now pretty shortly. So we'll take these live while we're broadcasting. So what's interesting is if you look at market like the gold market, we've seen these little flushes, these little pullbacks, next flush, and this is a kind of a strong pullback opportunity. So let's look at it on the hourly, and we'll just zoom in a little bit more. So sideways moving pattern, and then the flush to the downside. Now we've got a strong pullback. Actually, if it could pull back a little bit higher, just back to the 1800, it might give us a decent opportunity to get into it. Either way, we could probably look to get in below this little sort of 5-hour low, which it looks like we're quite close to. See, the only problem is that the stop loss placement, like this is really too tight for these markets. We don't really have a better spot, a better place to put our stop loss. So if you get this little breakout of this level and you get a little bit of an impulsive move, what we could do, which wouldn't be it wouldn't be the normal use of a stop loss placement, but we could probably just take this handle and just placing a stop above a psychological level at the 1800, so putting it in at the 1808. It's not quite as high as the 1824 because we're wanting to see if we can capitalize on maybe a 2-to-1 winner in this market to the downside. So It's not an ideal stop loss placement for this one, just so that you're mindful, but it would be a stop loss placement for it. So okay, so let's bring this up so we can look for a breakout below the 1789 level. 1789, and we'll change it to red because we're looking for a sell trade. So really all we're doing with these trades is we're just challenging these markets to be moving and breaking through these important levels. We're already in a series of trades with these dollar pairs already, so we're kind of expecting just continuation, and it looks like we're close to perhaps a few of these opportunities beginning to kick in. So there's your sell trade. So the big one really is the S&P 500. So very interested to see what's happening with that. We've seen this little market flush to the downside. However, we're largely in consolidation in this market, aren't we? So we're still in this zone, although there's lots of commentators suggesting, well, the markets are adapting and these markets are going to be pushing higher and things like that. We don't necessarily believe that to be the case. So we actually quite like the kind of breakout trade to the downside. If we look at it on a 4-hour chart, it's quite a strong, it's kind of a convincing move, having sort of pulled back quite aggressively and drifted sideways. And this is really what you'd expect. I mean, don't get me wrong, some of this price action is quite volatile. So we're working with slightly bigger stop losses as a result. But if this market breaks through, then there's your breakout trade below the 41.94, below the 4200 level. And you can probably identify these levels up here as a identifiable stop loss, certainly a technical stop loss. Okay, so if there's any questions, obviously, about anything covered in this broadcast, then feel free to use the chat box. Post any questions. Let us know if you're in any trades at the moment. We can perhaps have a look at those as well, as we will hopefully get an opportunity soon in the S&P 500. So it is a high probability breakout sell trade, except this time now it's below the 91.94 level. The 41.94 level. 41.94. Now that sounds a little bit better. Okay, so to avoid focusing on too many opportunities at the same time, we can narrow down our focus. So we're very close to the 75.11. Looks like we might just get a little bit of a flush through that level. The euro dollar is pushing to the downside. So the Aussie dollar could be the first one to trigger. Looking very closely at the gold as well, the 17.89. Hopefully we'll get some good moves, and we're virtually at that level as well for. So what it looks like is we've got some capital coming into the US markets, and they are looking actually really quite bearish now, if you take on board this price action. So let's see if we can get in. So we're seeing the gold market move lower, so we'll look to get into that. Let me see. The 1808 level. Right, okay, so right, we're getting a nice little explosive move. Oh, sorry, let me put this back up on screen. Okay, we monitored the gold market to the downside, so we've just got into that trade. Let's see. The euro dollar. Apologies, we are looking at these on multiple screens at the moment, so we're getting the move a little bit lower in the Aussie dollar. We're getting a nice little push to the downside in the gold trade. The New Zealand, we can choose the Aussie or the New Zealand. We look to get into the Aussie dollar. We can certainly take the 75.62 level. 75.64. 75.64. We look to sell this trade as well. Do you get the stop loss up on screen? Okay, so we'll see if we get some flush trades to the downside for these markets. So we're already in the euro dollar to the downside, the Aussie dollar to the downside, next leg to the downside, and gold further lower, and the S&P further lower. You can absolutely add the pound, you can absolutely add the New Zealand. You know, perhaps make some decisions and just cherry pick probably the better opportunities if you can. Right, we've taken quite a large size trade in the gold market, just the nature of that consolidation at that level, to see if we get a nice little breakthrough to the downside. And it looks like we're getting those opportunities across the board. So the euro dollar's breaking lower, the Aussie dollar's breaking lower, the gold market is breaking lower. So hopefully we'll be able to finish the week with a bang. So all of these markets are pushing in the direction in which we're trading them. We're getting really, really strong moves across the board. What we will do though is we will probably take half the risk off our gold trade as markets accelerating further to the downside. We don't want to suffer a bit of a snapback, so we can take the high. So 1797. $17.97. Sorry, it's just a little bit too low. We need to build in our 2 times the spread, 17.99. Okay, so we're getting some good moves across these markets. The euro dollar to the downside, the Aussie dollar to the downside. All the opportunities are there in red. So you've got a trade plan to work with. So a really strong move there in the gold market, and the S&P is beginning to squeeze lower, and I would imagine we're probably going to see a little bit of an uptick in the bond markets as well. So yes, we are. So we're seeing a 4 basis point uptick in bond yields. So that's, well, they're all correlated. So what we are trading right now is risk off market conditions. So we're seeing the dollar strengthen with really strong conviction. And now we just need to monitor and just track So what's going to be interesting if you get these like strong legs to the downside is how big is the snapback. That's going to be the question. So we'll see how we get on with these markets. Unfortunately, we do need to pack up there for the day. We do have another trading session, so we can fully expect a pullback. What you'd want to see really is a pullback. That's kind of natural. That's what we can expect. But you want to see some selling kick in at a slightly higher price. So what you're going to do is, a financial market is a battleground between buyers and sellers. So currently sellers are completely in control of this market, and you don't want the buyers to start getting a bit of a foothold in these trades. So when you see an uptick in price like we're currently experiencing, within probably a 10, 15, 20 pip range, you kind of want to start running into a bit of resistance if we possibly can. But we certainly expect further downside in these markets. So you can see that the gold market is kind of running into a bit of resistance. So we're seeing some buying, and it doesn't feel like there's much appetite just yet. You're seeing a little bit more appetite to sort of counteract that breakout trade. So it's normal to get the pullback, but what you want to do normally at around levels of resistance around the 18.84 for the euro dollar, or that same level, the 75.11 for the Aussie, and that just implies that these are markets and trades that you kind of want to stay in. Okay, so that's our trade. Hopefully we'll get some nice flushes to the downside in these markets, and we'll see how we get on with those. Obviously, make sure you calculate your risk exposure. You make sure that you know how much capital you're committing to each trade. Make sure you trade with stop losses. Trading without stop losses in these markets is beyond craziness, in our opinion. So try to avoid little errors like that, and identify a level in this market where if your analysis is incorrect, then you control your downside exposure, and not have all your capital at the disposal of the markets, because they're really quite choppy and erratic, and a lot of the fundamentals, the sentiment and technicals can be on occasion quite mixed and very difficult to work with. So on that note, guys, thank you very much for joining us. I do apologise, we do need to end it there, but we'll be back next week at 12:30 live. Give us a thumbs up if you possibly can. Subscribe to our channel, and we'll notify you when we go live. And have a great weekend. And let's hope we get some further downside. We'd certainly be expecting further moves lower in these markets. We've seen a little bit of an injection of cash come in. And let's see if we get that momentum follow through. We certainly hope we will do, and we actually do expect that to be the case. So, and then it's a case of just managing a trade once you're in it. So mitigating risk whenever you can, closing trades off, and we'll be posting these trades and any other trades we get into through our signal service as well for our traders, so they'll be notified accordingly. Okay, so look, thanks very much for joining us as always. Do take care. We'll hopefully see you next week for more. We can, for the near term, expect further dollar strength. That's really what we're looking to capitalize on, and a little bit more negativity perhaps in markets like the S&P 500. So we'll see how we get on with that, and we'll take one step at a time when we're trading these financial markets at the moment. So from everyone here at the Live Trade Room, thanks very much. Enjoy your weekend, and we'll see you next week. Bye for now.